Certainly employers looking like they're filling the ranks before Christmas. The Advantage Professional Job Index is up more than 3% for November. The trend, though, for weekly job ads is going backwards, and that's only suggesting some softness lies ahead. Robert Olivier from Advantage Professional with me now in studio. How is this different, and warm welcome to you, to
Good morning.
Seasonally what we would normally expect before Christmas?
What normally happens is the job market falls off, but it tends to fall off in December.
Right.
So the fact that we've had a week-by-week fall, which is sort of hidden by the number, the official number, is 3% up, but that's comparing to October. You take week one in the first week of November, compare that to week 4, and it's fallen 2.5%. Now, normally it holds steady for November and then falls.
Yes.
2008, the worst decline on record, we fell 7.5%. So we're not saying there's a catastrophe ahead, but I'm just concerned that those interest rate rises are starting to bite into consumer confidence and therefore business confidence.
Yeah.
So some of the optimism we felt for next year may not be quite there first part of the year.
So you're saying all the indicators suggest a tight jobs market ahead. Is this, though, meaning every sector is going to feel this? Or we know, for instance, in the mining space, investment intentions look to be ramped up there, so surely that one could be immune, or could it not?
Oh, I certainly think that you're correct in saying that engineering and mining is going to go very strongly. I mean, there are cyclical and global factors there that are going to drive that one for the next several years without doubt. Where we're already seeing a little bit of pain earlier on is in retail, and FMCG will follow. Yeah. So yes, it's those that are a little bit more sensitive to consumer confidence, to spending like that, discretionary spending. Hospitality and tourism has stayed strong up to now, but we're still waiting for the decline.
Yes.
I think that'll happen in the new year once everyone's had their summer breaks. I think that's in for a tough ride.
What is it about transport that showed such resilience in this month?
It's been phenomenally strong all year. It's hospitality, logistics and manufacturing, which is another surprise really, because with that strong Aussie you would have thought the manufacturing would struggle. Certainly the export side is going to find it hard, but obviously domestic demand is sufficiently resilient and strong to create that growth. Transport is also a reflection of mining and engineering going strongly, because there's all that, we've got to get the goods to the ports.
Not much mining going on in South Australia, but sort of fight back status.
Yeah.
If anything this month, are you surprised, or is this just kind of bouncing off a low base? It had to kind of pull itself up.
It has been bouncing off a very low base and not been a particularly strong performing state. So it is surprising, but then good, because it's a relatively small employment market. Likewise, the ACT has had a second successive strong month, and we wondered about that last month, and you look deeper into that, and what does tend to happen post-election is that some of the hiring freezes that go on while there's uncertainty is released, so that market's looking strong as well.
Tell me about, though, the rationale for jumping now and not waiting. How sort of much of a window of opportunity is presenting for workers?
Yeah, one of the things we've really highlighted this month is the fact that it's a great opportunity to catch those jobs while they're still there. Now, for employers, everyone wants to get staff at the moment. There's still 200,000 jobs online every week, so there's plenty of opportunity. It will ease in early January. Everyone sits on the beach, makes their New Year's resolution to come back to the job market. So now, our employers still want to find people, and the responses to ads tapers off as we go through December. So the logical thing is beat the rush, go now. It sounds like a sales pitch, but seriously, if you want to get your new job now, beat the crowd and get ahead.
Will they, though, be locking people in, or will they be mindful of the fact that they could be wise employers just to sort of wait and for those New Year resolution entrants to come in January?
Oh yeah, look, I mean, they've got to wait. It's just I think it's okay, if you want staff, you need staff. Yeah. You really don't want for 4 weeks' notice after that, so mid-February finding people. You do want them now. I think there's still, there is that demand still there. We've just seen an easing, so it doesn't mean those jobs are going to be switched off entirely. It's just maybe employers are going to say, well, let's just see now before we do all those big hires in January. Yeah. So, well, they could cancel a few orders if they have a bad Christmas. So.
Financial services and banking, The fact that they're going backwards at a time when we know all this mining investment's being ramped up is almost counterintuitive. You need more people to do the deal making, don't you?
Well, the banks, what they're trying to do is, I mean, their numbers are easing a little bit. It's early signs yet, but possibly what they're trying to do is they're trying to maintain those top line profit figures, and they just don't want to expand their teams like they had before. So they're trying to do more with less. So it doesn't surprise me. There's a little bit of an easing there. I think that there's areas like financial planning's had a good run, but now the stock market's looking a little bit jumpy. So you can still do those deals without creating too much new employment there.
Trades and services, what is that telling you about what's in demand? We're still out there pushing for people, for the handyman to kind of come round and do stuff, or there hasn't been a shift there in approach? I mean, that's quite a surge.
I think the handyman's going off to Western Australia to work down the mine, so we're going to find it tough. But still, trades and services are responding as well to that strength in engineering and in the new mining projects that are coming online. So you are finding that they will draw people. As we saw 3 or 4 years ago, you couldn't find a plumber or electrician in the Hunter Valley. They'd all jumped on planes and moved into state. So that area is very strong, and it also means we do need to be able to bring in those people on 457 visas to supplement, the availability here, because with NBN happening, the skills aren't there.
Tell me this belief that if rates don't go up tomorrow, and indeed, therefore, we have to wait now till February, will employers begin to see that for what it is, given the number of months that will then elapse? And perhaps the caution that they've exercised up until now won't be so much front and centre, that they'll have priced in the effect of that, and they can perhaps absorb and feel more confident into the new year.
Certainly so. We've seen that several times in the past, that really an interest rate scares people, but once they factor in, once they priced it in, once consumers do as well, and they realise, well, I can actually afford to still buy those discretionary items, then we just get back to where we were before. I think what hurt this time, I'm afraid, was the fact that the banks added a little premium to it, and that really knocked their confidence around. Certainly, and the media supporting that, not consumers. So it's a matter of when they actually get their budgets done in the new year, might see some more.
What's been your biggest takeout this year? The trend that surprised you the most when you reflect on the last 12 months? Are we in recovery phase? Are we still? I mean, how are we reacting vis-a-vis the rest of the world?
The rest of the world, I've actually got no problems there. It's been a phenomenally strong year, and we should be very thankful for our 26% increase in online ads. That's still a remarkably good performance compared to many other parts of the world. Out there, coalface recruiting, employer sentiment is still a bit mixed. So they're not brimming with confidence, but we know we're in a relatively strong position. I think a lot of people are saying, well, that mining wealth they're just waiting for it to happen where they are, because they're not quite feeling it there in their hip pocket. And employers are saying, well, I know things are good, but we're not quite seeing it through. But there is a confidence. My one big take: engineering and mining, it's been a staggeringly strong resurgence, and it's going to be really brilliant going forward.
The ripple effect, though, as you say, yet to be felt by the rest of the economy. We do value having you with us. Happy Christmas in advance.
Thank you very much.
Look forward to seeing you in the new year.
Cheers.
Okay. Robert Olivier there from Advantage, the latest print on the online space. Act Now, kind of the watch with the takeout from that before that window of opportunity closes on Christmas.